Happy holidays from all of us here at Wealthion to all of you. I'm one of your hosts here at Wealthion, Andrew Brill. We took a look back at this year and hope you enjoy these favorite guest moments from one of our best interviews of 2024.
Tom is the co-founder and head of research for Fundstrat Global. He's a financial analyst, a strategist, an investor, a businessman, an entrepreneur, but he's also a fortune teller. Okay, you have to admit that about yourself, Tom. You are a fortune teller because you see the future before we do, which is why you're probably one of the most popular guests I've had on Speak Up. So let's start with your fortune telling skills. Talk about the economy. Where is it today? And where is it going, Mr. Lee?
Thank you for having me, Anthony. It's always great to have a conversation with you. So I'm glad to be here. In terms of the economy, I think the economy has defied the expectations of many because it remains pretty robust, mainly because we haven't overinvested capital in the private sector. Companies have been cautious the last couple of years because since 2021, the Fed has signaled its war to fight inflation. It kept a lot of companies from overspending on CapEx. But there is a recession in durable goods and in auto sales and in housing. I mean, we saw that with existing home sales yesterday. I mean, they're just absolutely getting obliterated. And all of those three things in recession are really interest rate sensitive. So I think the economy probably is at a knife point where if the Fed begins to ease at the right time, and I don't know when that right time is, I think it staves off what could be a larger softening economy, but there is softness.
Let's talk about that for a second. Let's make you the Fed chair for a sec. Would you be cutting rates now? Would you be waiting? I understand that they're fearful of going too early because of the inflation dynamic, but it seems like if they don't go soon, you're going to have a steeper, deeper recession than's necessary. So where would you pull the trigger?
Well, I agree with your last point, Anthony. I think waiting any longer really does risk what is a cascade effect, right? As things start to slow, you unravel things very quickly. So to me, if I was the Fed, I'd be a lot less concerned about a second wave of inflation, which has haunted many FOMC members, with the realization that the things that have been sticky on inflation, like housing and auto insurance, they're finally turning, and there's not a goods reinflation cycle underway. So I would be cutting sooner. I mean, I think even the idea of a July cut makes sense.
But you're bullish. I mean, every time I see your interview, you're one of the people in my life that I have on Google Alert. Okay, I figure if you're talking, I need to be listening. So when I hear your interviews, you're bullish. Why are you bullish?
Well, I'm bullish now. In fact, I think today I would be buying small cap stocks pretty confidently because, one, I think that we are entering a growth scare because things are slowing. But to me, that's only a scare because they turn on a dime or inflect as soon as the Fed starts cutting. Housing demand's going to come back big once people are confident Fed's going to cut, commercial real estate finds its bottom, et cetera. I think a second reason we're bullish is that when we speak to our institutional investors, and we have hundreds of institutional clients in 26 countries, and we speak to them frequently, they're far more cautious and far more skeptical of inflation, and I think have been more risk averse than we believe. And so when institutional managers are so cautious at a time when we're relatively optimistic versus consensus, that's also bullish. We also know there's a lot of cash on the sidelines. There's $6 trillion in money market balances. I mean, that's just a mountain of cash. Granted, it's earning 5%, but it won't earn that forever. And then when we look at demographic trends like millennials, I mean, they are really entering their prime working years. So there's a life cycle driver to their spending patterns. And I think there has been benefits from the growth of immigrants in the U.S. I know we're seeing the liability side at the moment, but that's a very large labor supply that keeps the labor market from overheating. So, I mean, I think there's many reasons to be bullish.
So Bill Dudley, the president of the Fed, the former president of the New York Fed, is out with an op-ed today on Bloomberg saying that he got it wrong. He's changed his mind. He wants to cut rates immediately. Do you agree with him?
Yes, I've been following his comments because he is influential as a former member, and he has been one of those higher for longer, as you said. To inflect now and to call for cuts, to me, that's appropriate. And I think it's a recognition, and he's one of the earlier pundits to recognize this, is that there is a lot of softness out there. And if inflation isn't threatening, I'm not sure it makes sense to wait another 8 weeks to actually cut rates. So it's a pretty big air gap at the moment. And I think people get too caught up in the political noise thinking that this has anything to do with the election.
Would you cut 50 basis points?
I think the Fed could even signal that September is a definite cut date. And if it even is just one this year, I think it really reverses a lot of the softness, because the markets would take that cue from there and price in a series of future cuts, which is really, the market sort of has a lot of skepticism about how much cutting the Fed might actually do. But yeah, I would do at least 25 in July.
All right. So 25 in July. Is it crazy to get more than one cut this year?
Markets are pricing in 2.8 cuts, so almost 3 cuts this year. To me, the drop in core inflation justifies far more cuts from the Fed, because if we think of core PC running at 2.6 right now, and Fed funds are at 5.3, that's 2.7 percentage points of real rates. I mean, that's a penalty rate. I mean, that's the rate that you want to choke off the economy, and it's been in place for more than a year now. We fix the deficit through growth, or we have a huge deflation of the dollar. And in that case, of course, if that's how it's resolved, you really want to own something that's not dollar denominated. And it could be equities, but very likely it should be something like Bitcoin or gold.
Okay, so let's talk about that. Bitcoin has done great this year. It's up 50%. The ETFs, you see this cascade of money, this waterfall of money, exactly as you predicted. The halving happened. And so for those listeners that may not know what Bitcoin does in terms of the network spits out about 900 coins a day. And then sometime in April, it cut that coin distribution in half to 450 coins a day. And so the less supply you would think would move the price. The price has more or less been treading water here. You've got overhang issues. You had the supply onboarding of the government of Germany. You've got the Mt. Gox issue. Tell us about Bitcoin here. Are you still as bullish as you were? And what do you think happens to Bitcoin by the end of the year?
Yeah, we're still bullish on Bitcoin. Bitcoin's become an asset class now. It's now supported by a growing financial infrastructure, including BlackRock. I mean, when you get the BlackRock validating that as an asset class, it's not even close to being a flash in the pan. And I think many people forget that this is more of a signal of how much this asset class will grow over time, because when institutions got into private equity or venture capital as asset classes, something really well, Anthony, that signaled, a multi-decade period where institutional sponsorship and ownership would grow. So I think we're only in the earliest stages of where demand is coming from a new source for Bitcoin that hadn't existed really since the first Satoshi was minted. And so I think that Bitcoin, unfortunately, is affected by, it's a hyper volatile asset. So it's affected by supply perceptions, not just demand perceptions. And on the supply side, you're exactly right. Mt. Gox is finally being resolved. That's really been one of the biggest expected overhangs since the original hack. And so when the distribution, which is in July, when that's behind us and markets see that there hasn't been cataclysm, I think that's going to be a case for why Bitcoin does really well in the second half. the Germany distribution, that's very strange timing, but that's already behind us now. And I'd say the only thing that I think would hurt crypto is that it's still correlated and viewed as a risk on assets. So if the Fed is somehow unexpectedly tight, I think it would act as a headwind. But if the Fed starts cutting, I think you're going to see a move in Bitcoin that would correlate to what small caps would be doing as well. There's a lot of things correlated to a Fed starting a cutting cycle.
So 100,000 by the end of the year? Is that possible?
Yeah, I think that 100,000 or even higher is possible.
Thanks again for watching these favorite moments of 2024, and we hope we can continue to provide you with information that'll help you invest wisely and be financially resilient. Wishing all of you a healthy, happy, safe, and prosperous 2025.